In this chapter, we will look upon input service distributor. It will be a new time for some of you. It is a simple concept. Input service distributor means an office of the taxable person who distribute the input tax credit available to various offices or branches. So input service distributor will be there in a company where various offices or branches are owned by that company. Suppose if you take a bank will have more branches. So in that organization, there is a requirement of input service distributor. And what is the role of input service distributor is that he receives tax invoices from the suppliers on receipt of input goods or services. Means input service distributor will be an office of the organization. It will be a small office itself who is doing all administration works. So the first task for them will be receiving tax invoices from the suppliers. From which suppliers? Suppliers who are supplying goods or services to the company. Then the important point is tax paid on such input goods or services means the tax paid which is included in the price paid to the suppliers can be claimed as input tax credit. And what will this input service distributor will do? He will allocate such input tax credit received to various branches or offices of the taxable person. We will see one example also, then we will get a better understanding. The important point is all these branches or offices should have the same PAN, permanent account number. And as per the GST Act, input service distributor is deemed as a supplier of services. So this is a brief idea of input service distributor. Input service distributor means the office of a person, organization, a large organization which receives invoices from the suppliers for availing input tax credit and distribute such input tax credit to various branches or offices of the taxable person. Okay, and in the GST Act, they are deemed as supplier of services. Let us take one example. The registered or head office of a company is at New Delhi. The other offices at Chennai, Bangalore. The head office is at New Delhi. Under that, there are 3 offices, that is Chennai, Bangalore and Mumbai. So this is a big organization, means they have 4 offices. And they purchased a software and they incurred some installation cost also. Bill is received at the head office. The head office will be doing all transactions. And this software purchased is used at all locations, means in New Delhi, Chennai, Bangalore and Mumbai. Then, but invoice is received at New Delhi office. Who can claim input tax credit? Not only the New Delhi office, but all offices, because software is used at all the 4 locations, so that the input tax credit of the entire services cannot be claimed at New Delhi alone. It should be distributed at all the 4 locations. That is, input tax credit is availed on the payment of GST to the supplier. Suppose New Delhi office has paid a GST of 2 lakhs. New Delhi office alone cannot claim input tax credit. That input tax credit is availed also by Chennai, Bangalore and Mumbai offices. Such offices can deduct input tax credit from their tax liability. Okay, so that advantages will be available to all offices. In this scenario, Delhi Corporate Office has to act as input service distributor, and Chennai, Bangalore, Mumbai are called as units. There are some conditions or restrictions for transferring such input tax credit to the units by the input service distributor. Means when we take the earlier example, while distributing the input tax credit by New Delhi office, there should be some conditions. The condition is like this: tax invoice or other document as prescribed should be there. Tax invoice should be there, and the distribution should not exceed the amount of credit available. Suppose we got a credit of 2 lakhs. The input service distributor should not distribute 2,50,000, something like that. No, not more than the credit available. Then it should be distributed only to such suppliers to whom such services are provided. In the earlier example, the company had purchased a software which is used in all locations. So the credit is available to all units. Okay, but if the software is used only in 2 locations, suppose say in Chennai and Bangalore only and not in Mumbai, then input tax credit should not be allocated to Mumbai. It should be distributed only to such suppliers to whom such services are provided. Okay. Then distribution of common credit. On which basis we have to distribute the input tax credit? If there is no other measurement available, no details are available, then it should be allocated on pro rata basis based on the turnover of the aggregate, or means the aggregate turnover of the units. Suppose the input tax credit was 2 lakhs and the turnover of Chennai, Mumbai and New Delhi, Chennai, Mumbai and Chennai, Bangalore and Mumbai is 50,000 each. It should be distributed equally. But if the turnover of Chennai and Bangalore is 1 crore each and the turnover of Mumbai is 2 crores, it should be distributed. Input tax should be distributed on the basis of 1:1:2 ratio. Okay, so it should be distributed on the basis of aggregate turnover on a pro rata basis. So that was the first PPT. We will review the PPTs. We understood the input service distributor means an office of a large company which distribute input tax credit available to other units. Then we have seen an example: registered officers at New Delhi who is acting as a input service distributor, and units are in Chennai, Bangalore and Mumbai. Software is used in all locations, so it should be distributed. The conditions or restrictions are the tax invoice should be there from the supplier who has supplied the software, and the credit distributed should not exceed the amount of credit available, and it should be allocated to the units for which such service was provided. Then if it is common credit, it should be allocated on the basis of aggregate turnover. Okay, so we will go to the next PPT. We will see some examples how to distribute credit. There can be a scenario where units are in different states as well as units are in same state. So if the units are in different states, how we will deal with that? Means we have already seen an example of different states, means input service distributor in New Delhi and units were in Chennai, Bangalore and Mumbai. In that case, it is called as different states. In such a scenario, what we have to do? The GST credits can be distributed as IGST credit. All such credits, SGST credit, CGST credit or IGST credit, can be distributed as IGST credit. And as we have seen earlier, the common credits can be apportioned based on the turnover. Example: how to distribute the input tax credit. In this case, when ISD is in one state, say at Delhi, and recipients of credits are in Chennai and Bangalore. So input service distributor is at New Delhi and units are in Chennai and Bangalore. Let us take this example. The turnover for the relevant period is Chennai unit 10 crores and Bangalore unit 30 crores. So Bangalore unit is performing well. In this case, SGST, CGST and IGST that is available to Chennai, Bangalore and Delhi is like this. For Chennai, SGST is 5,000, CGST is 5,000, IGST is 10,000. So total is 20,000. What is the meaning of SGST, CGST and IGST? SGST and CGST will come only in the case of intra-state supply within the state. So Chennai unit has purchased the goods or services from the suppliers of Tamil Nadu state. So he has already paid SGST and CGST to such suppliers. So input tax credit is available to him in the form of SGST and CGST. And what is the meaning of IGST? Chennai unit had purchased some goods or services from outside state and that supplier was outside Tamil Nadu and IGST was paid by Chennai to such suppliers. So that was regarding interstate supply. So all these taxes can be availed as input tax credit by Chennai office. Total is 20,000. Then regarding Bangalore, Bangalore had a local purchase and paid SGST and CGST amounting to 3,000 and 2,000. And they also purchased from outside state for which they paid IGST. So total amount is 10,000. Then in the case of Delhi, input service distributor, that is common credits available 5,000, 7,000, 8,000. Total is 20,000. So SGST and CGST will come only on the case of intra-state purchase and IGST is in the case of interstate purchase. So such input tax credit is available to all parties, all units. So let us look how to distribute. Chennai unit has paid 5,000, 5,000 and 10,000 and it will be treated as IGST. It can be set off as IGST credit. What is the specialty of IGST credit? It can be set off with the SGST liability, CGST liability or IGST liability. So this credit can be set off against any liability that Chennai unit has. Similarly, regarding Bangalore, they have a credit of SGST 3,000, CGST 2,000 and IGST 5,000. Total credit is available is 10,000. So that is also treated as IGST and that input tax credit can be set off against any tax liability. And let us take Delhi IST. What is the status of Delhi IST? Input service distributor. Common credit, how it is available? Because Delhi input service distributor or Delhi office had purchased some goods or services from local suppliers, so they are getting SGST and CGST. And they have purchased some goods or services from outside Delhi, so they paid IGST. So total 20,000. All this common credit can be distributed, allocated to Chennai and Bangalore offices. Here Chennai is 5,000 and 15 for Bangalore. Why? Because it is allocated in the ratio of turnover. That is rupees 30 crores for Bangalore and rupees 10 crores for Chennai. So we apportioned in the ratio of 75 to 25 like that. Okay. So the summary of this solution is that the common credit available to an input service distributor will be allocated on the basis of turnover of the units. Okay. And in the case of different states, the credit available can be treated as IGST. And we have already seen different states. In this case, we will see same states. Distribution of ISD2 units located in the same state. Why Chennai SGST and CGST will be treated as IGST. In the case of input service distributor, it comes like that. That is, it can be set off as IGST credit. No, the Chennai office cannot distribute their credit, because only input service distributor can allocate credit. This credit available to Delhi input service distributor only can be allocated to units. If there is any credit available to a particular unit, that cannot be allocated to other units. So in the case of same states, units located in the same state, in that means both input service distributor and unit is located in the same state. In that case, CGST allocated as CGST credit and SGST allocated as SGST credit. That is, IGST credit can be distributed as CGST credit or SGST credit as usual. And we will see one example. Input service distributor is located at Bangalore and unit is located at Mysore. Both are in Karnataka state. Credit available: CGST 6000, CGST 6000, IGST 10,000 and SGST 4000. In this case, we are taking Bangalore input service distributor as case. They have CGST and IGST. Both these things can be taken as CGST credit and will be allocated to Mysore unit. And SGST credit available is taken as SGST credit and is allocated to Mysore unit. I have a doubt, means this IGST, yeah, it is there. IGST credit can be transferred as SGST credit also. Okay, so CGST credit should be allocated as CGST credit only to the unit, and SGST credit should be allocated as SGST credit to the unit, and IGST credit should be distributed, can be distributed as CGST credit or SGST credit. Okay, how can SGST and CGST credit figures be different? It should be 50-50, because if the tax rate is 28%, it should go 14-14. That is, in the case of intrastate transaction, half will go to the center, half will go to state government. But how credits will be, maybe there is a requirement of some editing also. Okay. So anyway, the concept is CGST credit and SGST credit can be allocated as CGST credit and SGST credit, and IGST credit can be allocated as either CGST credit or SGST credit. Okay. So this is the end of the second PPT. We have some doubts there. Let us see, means there are two concepts: different states and same states. Different states means credit is distributed as SGST credit or CGST credit or IGST credit as IGST credit, and common credits are transferred on pro rata basis. So we have already seen an example: Chennai, Bangalore and Delhi. Chennai have their own credits and Bangalore have their own credits, and input service distributor Delhi has a common credit which will be allocated on the basis of turnover of Chennai and Bangalore. If it is same states, units located in the same state, CGST credit can be allocated as CGST credit and SGST credit can be allocated as SGST credit. And IGST credit can be distributed as CGST credit or IGST credit. So we have already seen an example. Let me check again whether there will be any chance of difference between CGST credit and SGST credit. So we'll move to the third PPT, that is legal formalities for input service distributor. Requirements for registration. For an input service distributor, I have already seen told in the first PPT that they are deemed as supplier of services, and they need to mandatorily register as per the GST Act. If there is an input service distributor, that office should compulsorily register under the GST Act. And threshold limits of registration is not applicable. What do you mean by threshold limits? Threshold limit is 20 lakhs for rest of India and 10 lakhs for specified states like Arunachal Pradesh, Assam, Mizoram, Sikkim, Tripura, Nagaland, Manipur, Uttaranchal, Jammu and Kashmir, like that. Okay, so for specified states it is 10 lakhs and for rest of India it is 20 lakhs. And another important point is the registration under the existing regime under service tax would not be migrated in GST regime. For example, at present scenario, banks and such organization will have an input service distributor as per the Service Tax Act, but they will not be enrolled. They cannot be migrated as such. They need to obtain a fresh registration. Okay. So all input service distributors should take a fresh registration. Then, is there any chance for a multiple ISD? Yes, that can be there. Like security division, marketing division, purchase department, etc. There can be various input service distributors in the same organization. Then, documentation. What things should be taken care of? Credit can be distributed only through prescribed document. That is, they should have a invoice or such prescribed documents as prescribed in the GST Act. And prescribed document is not mentioned as per the GST Act. So there will be a separate notification for that. What are the prescribed documents that should be kept by an input service distributor? Of course, invoice is a compulsory document. And what about monthly return? They have to file GSTR 6 by 13th of the next month. So GSTR 6 is the monthly return for input service distributor. Then, what is the status of excess or wrongly distributed credit? What will happen if input service distributor allocates more than the credit available to him? In that case, action against input service distributor will be taken, and also against the unit or offices to whom credit was allocated. So care should be taken not to distribute excess credit than what is available. Then if there is any excess credit allocated like that, it will be recovered along with the interest from ISD or its units. Okay, so this is regarding the rules and regulations or legal formalities of the input service distributor. Requirements for registration: they will be taken as supplier of services. They should compulsorily, mandatorily register as per the GST Act, and there is no enrollment procedure for input service distributor. They need to take fresh registration. And what will happen in the case of multiple input service distributor? That can be maintained in an organization. There can be multiple input service distributor. Then documentation. What should be the documents maintained by the input service distributor? The Act is telling prescribed documents, but prescribed documents list is not mentioned. So we have to check it again, and we have to wait for more clarifications on this point. And regarding monthly return, GSTR 6 should be filed by the ISDs before 13th of the next month. So if GST is coming on July 1st, what will be the first return? What will be the date for the first return? It will be 13th August. Okay, they need to file the return for July before 13th August. And if there is any excess or wrongly distributed credit, it will be recovered along with the interest from ISD or its units, and action will be taken against ISD and its units. So that is all regarding the webinar, regarding the chapter on input service distributor. Thank you.